And I'd like to expand on this idea that we were talking about earlier this morning on the record divergences that we have inside of our markets. The first divergence is with the U.S. dollar, and of course, the question is when you're looking at a daily or say a 12-hour chart here, is as the indices are making new highs, new all-time highs, new highs of the year, new all-time highs in history, is the dollar making new lows of the year? And the answer is no. In fact, not only is the dollar not making new lows of the year, it's not making new lows of the week, as the ES and NQ are making new highs of the week. In fact, the dollar is rallying away from its lows of the week in a series of counter trend longs and challenging its halfway back short for the week. And so, given that we are inside of a negative correlation on the US dollar, that is in the negative 0.9s and negative 0.8s over the 30-day, we are now diverged on the longer term daily charts, weekly charts, and we're diverged on the indices, or excuse me, on the intraday time frames. That is a pretty significant moment. We have only been diverging on the longer term time frame. Now it's the intraday as well too. And so this force is incredibly important to understand because the dollar's relationship, negative 0.9% correlation, the indices have diverged and should be trading at their lows of the day down here in US dollar terms. And it looks like they're revisiting those levels. Let's go to our bank chart. And what is bank doing from the perspective of the longer term time frame? Is bank making new highs of the year with the indices? And the answer is no. It is currently not even close. And then the next question is, well, in the intraday time frame, bank should be making new highs of the week here, shouldn't it? While the indices are making new highs? No, it is not. It is not making new highs. And so you have this group of individuals who are chasing big green bars at new all-time highs, trying to buy a breakout, when none of the leading indicators in the longer term or the smaller term time frames are suggesting anything is valid about the move. And you can trade the financials. You can trade the dollar individually, or you can trade, what's the next leading indicator? You could trade the VIX. The VIX, the question is it making new lows of the week to support and to correlate, to back up the indices, validate them, justify them making new lows of making new highs of the year? And the answer is no, it is not. In fact, the VIX has been defending pullbacks from the lows of its contract to highs. And it completed a profit target here this morning and then pulled all the way back into its next measured move long in its series. And if you think about it from the perspective of Tuesday's price action here, we're returning to, where's the halfway back short for the week? Above us here on the VIX in the May contract. That would be like the indices returning to their halfway back longs for the week. Let's just do a little quick experiment, on where that is in relation to the VIX. This is what and by the way, we had entries into this. I mean, it isn't from a lack of opportunities that we've had this rally. We had traditional longs. We had pullbacks here going into Monday and then a retest on Tuesday. We had extension long levels last week and then on Sunday night, Monday. But for the most part here, we have gone straight up every single trading day here this week. And, we had... This stream continues at eminiaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.